Good afternoon, and thanks for joining me for today's FS Club webinar, Empowering Personalisation and Automated Decisioning, with David Tuppen from GFT and Stuart Simmons from Denodo. GFT are a sponsor and core part of our FS Club community, as well as being internationally recognised digital transformation leaders, so it's great to learn from their expertise today. David is a UK data and AI client solution lead at GFT. He's been working in the data space for 20 years, specialising in enterprise data strategy at the Bank for International Settlements in Basel, Athene Holding in Bermuda, and Milliman Actuarial Consultancy in London. We're also joined by Stuart Simmons, Sales Director at Denodo. Stuart has over 30 years experience in the UK banking and finance sector, including at IBM, Oracle, and VMware. So we're very well looked after today. If we haven't met yet virtually or in person, I'm Charlotte Dorbrashley and I manage the FS Club here at ZN. And I'd like to warmly acknowledge our very generous sponsors, including GFT, who enable us to continue to bring you a wide range of thought-provoking content across finance, technology and economics. As usual, the slides for this presentation are publicly available on our website and in the chat box. We'll record the session and it will be available to watch on our website within 48 hours. We'll also be holding a 20-minute Q&A session after the presentation, so please use the GoToWebinar chat facility to send your questions in to me, and then I'll feed them into the experts. Now, without further ado, it's my pleasure to hand over to you, David.
Thanks very much. Can you see my screen?
Yes, we can.
Perfect. Right, so today we're going to talk about empowering personalization and automated decisioning and what that actually means. My name is David Tuppen. As mentioned, I'm the head of data and AI client solutions in the UK for GFT. I'm going to talk today about what that actually means in terms of personalization, how that revolves around a unified customer view, and what essentially the bottlenecks could be. We also have Stuart from Denodo, who can introduce himself in a second. He will talk about solutions around that problem statement. Over to you, Stuart.
Thanks, David. Yeah, hi everybody. I'm Stuart Simmons. I'm Sales Director here at Denodo, focused on banking and finance. And David, if we want to push on. So to introduce Denodo, Denodo is the global market leader in data virtualization. We have over 1,000 customers, 800 employees worldwide. We're in pretty much every major geography. Last year, we were very excited to announce a 336 million Series B investment, and we have customers across every vertical. As the Denodo platform is a middleware solution, we're not tied to any singular vertical. Indeed, the application is across all major verticals. Over to you, David.
So about GFT. So GFT, I would say, is the engineering partner of choice for modern data platform innovation. We have 12,000 plus employees, which are engineers, architects, consultants worldwide, work across 20 markets worldwide, 35 years experience. We have vast experience in digital transformation, platform services, smart technologies, and across the BFSI space. That includes insurance, banking, and other industries. We have a plethora of clients. There's a handful of clients that you can see on the screen, which is HSBC, Deutsche Bank, Santander, and others. We're close partners with all three clouds, and also partner with a select few ISV, one of which is Denodo. So introduction to customer unified view. So what does this actually mean? When we talk about a customer unified view and empowering personalization, it all comes down to the centralization of a customer view, right? Customer data platform cited as the most frequent technology used to help organizations achieve 360 view. That's from Gartner. How do you gain a central view of your customer across multiple domains? And why would you want to do this? You can create insights over multiple domains and dimensions relating to that customer. You can personalize offerings across different domains by adding the same customer information to that product. And I'll talk about what a domain means in a second. And then you can start to understand and know your customers better by giving better customer experience. Gartner notes organizations that have achieved a customer 360 view of their customer can share some notable hallmarks that all customers should follow. Firstly, understand what customer 360 view actually is. Right? Whether you're calling it a unified customer view or customer 360 view or a centralized customer layer, the focal point should be creating a master view of your customer. And then you can apply that master view across different domains. Again, I'll talk about that in a second on what that looks like. Once you've created that customer view, that master view of your customer, you need to overcome data quality issues. You're going to have inconsistency in your customer data if you don't create that master view. So data integrity is key at the customer level to ensure consistent, trusted insights. Once you've created that master view and those additional domains, you need governance across each one of those. This leads to the integrity of the data. So with trust comes governance. And the customer data needs to be governed as a master data product. So what do I mean by that? What do I mean by domains and master data product? So if you think about the customer, that's the center of every domain. And this is an example looking at insurance as an example. The customer is at the center of, for instance, policy and products. You may have multiple products, life insurance products, home products, motor products. That customer may have given feedback to the insurer. That customer may have had to give their health status to the insurer so that they can take out life insurance. They may have open banking, or they'd have to give their credit scoring. They may have submitted for claims that have to pay in premiums, that have to include their details about themselves. And maybe they have Sentry data, a smart car, maybe that's feeding in data from how they're driving for their products. By putting that customer at the center of each one of those domains, we can now get a holistic view of that customer. We have that unified view. Now we can create insights and then hyper-personalization across each one of these domains. Now imagine if you have multiple customers with multiple policies, multiple products. If customer A has taken out a policy, maybe customer B wants the same policy. If customer A has been submitting multiple claims, maybe customer B are going to be doing the same thing. And this is where we get that hyper-personalization across domains by using that unified view. But how do we do this? So how do we create the central view of customers? It sounds simple. We gather the customer information. We then have to clean up that data. We clean up the customer information. That spoke about trust and integrity of the customer data. We then create a customer product that we can distribute. It's a data set of that product that we can distribute to each one of these domains that you see here, so that each of these domains can use that customer information. And now we have a distributable customer product that can be used across premiums, across claims, across health, across finance. And what does that actually look like? What do I mean by that in terms of a workflow or a data flow? Well, if you consider where I talk about consolidation of all these different sources of data, you receive your data from whatever your system of record. If you look at the top of the diagram, you'll see a landing zone of data of sorts, right? We gather all the customer information, all that raw information. We then want to clean up that data within a curated zone, and then we create your customer product. From that customer product, we can now distribute that data set to your, for instance, policy domain, your claims domain, your premiums domain. And we can create insights from different customer policy motor information, customer policy life information. We can create customer insights like customer churn or the hyper-personalization across different products, or your financial health of your customer. This all sounds great, but there's got to be the gotcha. And the gotcha is always going to be, if you're dependent on that product, that means there's a bottleneck. And how can we reduce that bottleneck? So the biggest challenge is a dependency on the master customer product because it's persisted. You can't get around the transformation. So no matter what we do, we have to transform that data. We have to clean up that data. We have to fix it into a data set that can be used in our product, claims, premiums. So we can't get away from the transformation as such. But do we have to persist it? So to get away from that bottleneck, can we create an automated tool, an automated solution that allows us to see changes in our customers, to see changes so that we can create that hyper personalization faster. And how do we do that? What's the solution for that? And this is where we enter into data virtualization. So over to you, Stuart.
Thanks, David. Thanks for outlining the opportunity, but also the challenge. So what I'll look to do now is just to explain at a reasonably high level what Denodo and data virtualization is. So as David outlined, a significant challenge to personalization, automating decisioning is persistence of data. And if you think about persistence of data, that's often replicated from a number of systems to a separate system, and therein lies data latency and all of the challenges of costs and maintaining those different replications of data. So data virtualization addresses these issues in that data virtualization allows you to access any data source, irrespective of whether it's in the cloud, on-premise, whether it's streaming, whether it's a NoSQL, whatever the data source is. And you can see those represented at the bottom of the screen here. We have over 200 adapters to be able to connect to these various systems, but we also can connect via generic adapters such as JDBC or ADBC. The platform is a no-code platform, very wizard-driven, and you're able to create data assets and data models very quickly. And the platform allows you to access these data sources, create these data models, and therefore query these sources in real time, but crucially, without having to replicate the data. So if you consider what this means that all of these various disparate sources, these very large data lakes and enterprise data warehouses, if I take the concept of a bank, they're typically siloed to your credit card domain, your mortgage domain, your loan domain, and so on. And to the point that David was making around understanding your customer, understanding the products that your customer has, the debits and credits, you need to be able to unify all of those very large data silos. And this is what banks are using data virtualization for in the context of personalization. So in essence, you're able to unify these very large data silos, and you're able to provide a common connector to enterprise applications, data science tools, BI tools, but also very often we're seeing API to API data as a service models being created. And just to talk through how Denodo achieves real time, there is over 20 years of query optimization R&D within the platform. As I said, the platform can connect to all the various sources. You can create your models, you can input logic within the platform, stored procedures, where clauses, so on and so forth. When a query is executed, the platform will take into account all that's already known about the sources, where the data is, the format of the data, and so on. And what the platform would look to do is to interrogate those sources at the lowest cost of query. So it will run a cost-based query plan in milliseconds. And that's taken into account all that's known about the sources, the data, and the model, but it's also interrogating 15 to 20 optimization techniques such as tuple matching, branch pruning, push-down aggregation, and so on. And essentially what the platform is seeking to do is to reduce data movement by up to 90%, and that's how you get to your real-time performance. Now, one of the points that David was bringing up previously was around governance. The platform will integrate directly to your governance tools and your security tools, and it will enable you to essentially build a single point of entry to querying your disparate data sources, but also create a holistic and consistent application of security and governance policy execution. So it becomes your execution framework for your security and governance. And if I just touch on security for a moment, we're all very familiar with role-based access controls, in which you can define the roles and the privacy and access that each role should have. And within the platform, you can integrate with Active Directory and import your Active Directory groups. You can deny and redact data, column and row level, and get very fine-grained on who can access and see what. But in the context of governance, you may well already have a governance catalog, which is holding the policies and rules for policies such as GDPR or PII. The challenge is how you maintain those policies and ensure that those policies are executed every single query. And that's particularly important when you consider the risks of queries and data going astray. So the platform has also attribute access control, in which within a source you may have data that is subject to, say, PII. You're able to tag that data and apply that tag or associate that tag to your PII policy. Therefore, anytime a query is executed, then that policy is applied. And similarly for your role-based access control, etc. So the real benefit of why organizations are turning to data virtualization is very much to break down the silos, but it's also to simplify your data architecture and to significantly increase the agility within data management, data engineering operations. In this way, it also contributes significantly to reducing the overall cost of your data management. David, if you'd like to push on to the next slide. So I just want to bring what is a slightly technical topic to life a little bit. If we take, everybody uses a bank for their current accounts, mortgages, loans, credit cards, whatever it may be. And very often we use more than one bank for various things. I myself have a bills account, a mortgage, and a current account elsewhere. This provides a particular challenge when thinking about a unified view of customer for hyper-personalization and for instant decisioning. If we think about instant decisioning within the context of a mortgage, typically a mortgage application is an in-principle process where you may be entering data into a website or an app on your phone, and you'll find yourself entering data which you're sure the bank has already got. But you'll go through this process for 30-40 minutes and then enter the information, in which you'll then get a response in an hour or two to say, in principle, happily they can approve a mortgage or unfortunately not. But if they can, subject to an hour on the phone with a mortgage advisor, going through a lot of what you've already gone through, and then they'll come back to you in a few days with a decision. Now, much of that process can be automated. Technology exists. The key here, however, exactly as David was outlining previously, is you need this unified view of customer. And that unified view is not just unifying your own banking silos, but it's also unifying the view of the customer beyond the site of the bank into open banking, open finance. Now, critical to this is to then be able to deliver this instant decisioning within human waiting time. So if we term in this case real time being human waiting time. So you need to be able to query at volume in real time all of the bank's data silos plus a feed from open banking or open finance. And then you're going to need to leverage a number of ISVs. So you can see a number of boxes here outlining disciplines within hyper-personalization decisioning. So there are personalization engines like Personetics, Money Hub, etc. Decisioning tools like FICO, Finex's Prevenir, and so on for property, rules engines, credit risk, and of course AI, Gen AI, and large language models. Within an instant decisioning program, you're likely to want to use or utilize many of these tools. So Denodo provides not only the ability to be able to unify all of your data sources, but to David's earlier point about creating a customer data product, you're able to create a customer data product with your DQ, your data quality tools built in, your security, governance, and your semantics all built into that product, which is now consumable with these ISVs to be able to create instant decisioning capability, because the platform can integrate with the various ISVs via an API in real time to be able to create the outcome that you're looking for. If you look again to personalization, all of the banks are on a journey for personalization to a greater or lesser extent, but very often what they're trying to do is work out their plumbing, simplify their data architecture, etc., maybe migrate to cloud, consolidate data sources, so on and so forth. However, demand from the business and the market is that we're looking for more from our banks in terms of services. We're looking for banks to sell us less product and give us more insight and value add services. So the platform enables you to deliver on the value of personalization within a controlled delivery cycle in parallel to sorting out the plumbing that the bank wants to do, or whatever it is that they want to do with their sources, migrate to cloud, whatever. Because you're able to create your models as a logical model, which it will take the data from wherever the data is, and you can actually migrate live and not have to turn off your line of business applications. So this ability to be able to decouple your line of business applications means that actually I can work on my business projects to deliver on the business plan and the business case that the business has to create these personalized and decisioning services. And I can decouple that activity from whatever activity I'm undertaking within my data sources, as I say, migrating, simplifying, whatever it may be. And with this ability to be able to decouple, to be able to work in real time with various ISVs, as you can see on the screen, just a sample of, this means that I can actually start my personalization journey, and I can start to leverage some of the capabilities that platforms like Personetics, Tink, Money Hub have, that can enable the bank to be able to look at behavior in terms of insights, in terms of how a customer treats their money, as to where they are in their life cycle, whether many major life events are happening, etc., and then be able to tailor products and blend products across maybe insurance, credit card, loan, and mortgages to deliver a service with insight to the customer that goes much deeper than today. Today, the banks will provide insights into spending by category, but there are capabilities that would be significantly advanced, and the key to doing that is to unlock the data that sits within the silos, and to David's earlier point, unify that customer view. So that's a whistle stop tour from me. Back to you, David.
I think we're opening up to Q&A now, if not mistaken. Charlotte?
Indeed, we are. Thank you very much, both of you, for the informative presentation. On the screen now, you'll see, shortly you will see David and Stuart's email addresses. So do feel free to get in touch with them directly. But if you'd like an answer now in real time, please keep putting your questions into the chat box. And firstly, we have one here for David. You mentioned having data governance. Do you recommend one data governance team or multiple teams?
I would say on a design of this fashion, when you have a domain-led architecture, which is following what somewhat a democratized architecture like data mesh, have multiple data governance teams. And the reason for this is that people within, if you use the insurance example, if you have an underwriting team, they're going to want to govern their own data. If you have the claims team are going to want to govern their own data, and the customer team, that master customer domain that we've just created, we need a team to maintain just that, right? It's not subjective. We can't have multiple versions. You have to have one team that maintains each one of those domains independently in this architectural type.
Okay, thank you. Now one for you, Stuart. Can data virtualization handle real-time queries at scale?
Yeah, absolutely. So the platform is essentially an engine. So the higher the volume, the bigger the engine. Indeed, anecdotally, I was told just recently of a US bank conducting, I think it was 67 billion queries in 1 month, which was 25,000 a second. Not quite sure what the use case was, but that's significant volumes going through the platform. As I say, it's an engine, so scale up, scale out is not a challenge to the data virtualization platform, which is critical if you think about the volumes of data that banks are dealing with.
Thank you. David, you mentioned customer data as master data. Can you expand on that a bit and explain, like, if you would recommend using master data anywhere else?
Yeah, I think it sounds like we're referring to master data management. Yeah, but yes. So in this example, having a domain-led architecture where the customer is at the focal point, that is a master data domain. There is still going to be a need for master data for other dimensions, right? And when I say that, I spoke about data quality quite a lot. Data quality, rule-based data quality, is dependent on a master data reference data domain. Unless you're using ML-based and sparse DQ, you have to have something to compare that data to, unless you're embedding rules within each one of the domains, which is never going to be a great idea. So 100%, you still need to have a master data a domain. You can define what that's going to look like on top of the customer master data domain.
Thank you. Back to you, Stuart. Is a unified view of customer, or customer 360, as it's referred to, a common use for data virtualization?
Yes, I will answer that question. I just want to touch on what David was just talking about through MDM. Customers are also using Denodo to create their semantic layer, to create their reference data, etc. And you can see on our website a presentation by Johannesburg Stock Exchange that are using the platform across or using the platform in order to provide access to all of the data within JSE, and they're using reference data as part of their semantic layer in order to be able to create that ontology and that understand association relationship within the data that they have. So back to your question in terms of, is Customer 360 unified view of customer a common use case for Denodo? Absolutely. And it was one of the key reasons to adopt data virtualization at one of the global retail banks. The problem, as was outlined, is that every financial organization has a customer 360 view used for KYC, AML, and so on and so forth. The challenge is maintaining that view, and using traditional tools with data at volume and scale. That can mean a lot of the maintenance tasks can take quite a bit of time, but not necessarily in themselves be delivering a lot of value. And these tasks tend to create a backlog, and the customer 360 view slowly becomes the customer 270 view, becomes the customer 200 view, and then a whole project is kicked off again to refresh the customer 360 view often to avoid issues with compliance, regulation, AML, so on and so forth. The benefit of using data virtualization as a logical platform, with this ability to be able to unify these sources, but also to be able to create logical models. Logical models are far more easily maintained. Tasks that may take hours or days can be done in minutes. And so that provides the ability to maintain models like Customer 360. So with this ability to be able to maintain my models far more accurately, this then means that actually I have a little bit more confidence when I'm creating decisioning capabilities or personalization capabilities. So with reference to one of the earlier questions of performing at scale, yes, the platform will perform at scale. Yes, it can unify your data sources. Yes, you can maintain your products far more efficiently. And this in itself is creating the opportunity for banks and financial institutions, insurance companies, and others to not only create decisioning, personalization capabilities, but also to think about the customer experience and to think about what things like generative AI, what applications there are in generative AI to improve, automate decisioning in terms of process, maybe processing claims, etc., but also give a better CX and deeper insight and service to the customer. Sorry, long-winded
Thank
answer.
you.
What was a very short
No, it
question?
was very thorough. Thank you. We've got another question here, which I'll put out to the both of you. How difficult is it to connect a bank with an insurer asking the same question? So they both want that same information.
It's a question around open banking, right, Stuart?
Yeah. So as we know, 2017, Martin Lewis sat on the Good Morning sofa talking about the benefits of open banking and the way in which banks would be able to deliver the services that we've been talking about. The challenges, of course, right now, using traditional tooling, is that open banking is just simply another silo. So it's been used for things like invoice reconciliation or faster payments, but that's within a silo of your current account division or your business banking division. But if I'm able to unify my own data sources, open banking then becomes a more useful prospect in that I can actually now connect, as David is saying, to other insurance companies. I can understand what insurance products, what current accounts, mortgages, loans, what have you, and where you are in a positive or minus in terms of your balance overall. And then I can also consider what my risk processes are, and can I improve my risk processes, for instance. I'll give you one very quick example. If you have, we'll pick on a young chap, why not? If you have a young chap who falls into financial difficulties and earns himself a county court judgment, if that individual takes on two jobs to pay off that debt as quickly as possible, that's behavior that should be rewarded. And therefore, the credit and risk decisioning, you might want to tailor a little bit more in terms of reflecting that behavior. Currently, if the process is with the credit reference agencies that you'll have a black mark against your name for 6 years, irrespective of whether you've taken steps to correct your financial position or not. All of this is particularly crucial with being able to leverage open banking, being able to see what products the customer has, but also what's their behavior to finance, what's their behavior in their life cycle as they go through major events, and if they do fall into difficulty, how do they react?
Pretty worthwhile noting it just quickly, Stuart, is that there's actually somewhat of a demo in Denodo that relates to this, right? Of going through a credit decisioning process with mortgages and using open banking to look at finances to see if you can make a better decision. Worthwhile noting that, right? That somewhat relates to this question.
Yeah, correct. So we've created a demo to reflect say, a young couple looking at a house. Yes, it's a financial consideration, but a young couple in their, say, mid-20s might also have a young family or be thinking about a young family. So the considerations go beyond the financial. What's the area like? What's the crime in the area like? How do I get to work? What's the schools in the area like? Where are they? And so on and so forth. So as David kindly pointed out, yes, we've created a demo which shows connecting to Rightmove data, to Google Maps, to the National Crime Statistics database, to synthesized banking data sets, including open banking, to be able to show, yes, indeed, happily you can or cannot get a mortgage, but also what's the impact of open banking. So the scenario is very simple. In the first instance, unfortunately, given the view from the bank's own sources, you don't have the liquidity to be able to afford the mortgage. However, if you have open banking, then it's quite possible that maybe there are funds elsewhere that would enable you to move forward. And so it gives you a reason to opt in. And sure enough, in this scenario, that's exactly what happens.
Thank you. Going back to the idea of data silos, someone's asked how many banks actually have data lineage sorted out across risk and compliance, and legal and procurement? Or do these data silos, are they going to preserve?
Great question.
Well, data lineage is, I mean, I don't think any of us is going to have a finite answer on how many banks have resolved data lineage, but it's a definite challenge, right? And it goes all the way down to the architectural pattern that you've put in place. So data management itself, you need data governance, you need data quality, you need master data management, you need data lineage. Data lineage is dependent on whatever you define within your data governance as critical data elements, as you can't track your lineage through to master data management, right? So it's a big problem to tackle in any industry, is data lineage, which luckily, and I'm not just upping Denodo here, but luckily tools like Denodo can help with that, which makes it quite easier to implement.
Yeah. So thank you again. So yes, within Denodo we have data lineage, and it's one of the key functional capabilities that are reasons that at least a couple of the major banks that I can think of right now are adopting data virtualization for their regulation and compliance reporting. The challenge with regulation and compliance reporting is not just being able to provide a view of the data, but it's also transparency of the data in your risk decisioning. What was the risk decision taken at that point in time with what data, and can you replicate that and prove that? And we have customers doing exactly that with Denodo, and critical to that is also data lineage.
Thank you. This one's also, I guess, for the both of you, but looking at risks with automated decisioning, what do you see these key risks as being, and how can they be navigated?
I can jump in. I would say it's very easy to present and visualize how we can automate decisioning, but there's always every organization is different when it comes to timing, and that for me is the important part. And especially with the route that we're going down nowadays with democratized types of architectures, we're looking at domain-led architectures. Data is ready at different stages, right? So, and that's where I came back to talk about my bottleneck. If the customer data is not ready, then the other domains have to wait. And that's just looking at customer. If any of the other domains aren't ready, they haven't processed, they haven't got all their data, and it's dependent on another domain, you won't be able to achieve any type of insight until that one's finished as well. So I highlighted one single bottleneck. There's going to be a plethora of bottlenecks within a democratized architecture that you have to try to work around and find the best solution for. And that's where I led into saying that you can't get away from transformation. Transformation has to happen, right? And that's going to be a bottleneck, which you need to consider for automated decisioning. But how can you get around that? And one of which is the persistence. Should you really be writing data somewhere and pulling it back out and putting it somewhere else and pulling it back out? No. let's get rid of that and look at how we can virtualize that and speed up that process through virtualization. But there is not going to be a 5-step process to eliminate. Is my opinion. Every industry, every organization is going to be slightly different, and you're gonna have to work through those gaps.
Yeah, I think it brings to the fore. Technology is often not the inhibitor, and that's very much so the case here. So the technology exists in order for you to be able to create these capabilities. The challenges, of course, go beyond the technology into, what's our risk profile? How do we manage risk profile in any one scenario? What's our relationship with credit risk agencies going to be like now and in the future? What do we need to understand about our customers relative to risk profile? All of this sort of stuff is a process. And as you start to unlock capabilities like unifying massive data silos within a bank is a huge undertaking and a huge step forward, massive step forward. I had a bank, one of the big four, just recently saying to me, we've never been able to do this before. Well, that's terrific, but the question is now, what do we do with it? How do we take it to market? How do we do it in a controlled manner that manages things like risk? So process and organizational governance are things that will need to be thought through. If you take the consideration of, if I sell you a mortgage with an insurance product built in and maybe a car loan amortized over the term, who do I remunerate within the bank? The mortgage line of business, the loan line of business. So how do I work as a bank? Do I have a cross silo blended product team? Terrific, but how do I maintain my domain knowledge and my domain skills? So these are sorts of things that I would expect people turning to David to start to get into the meat of those kind of considerations. But it's a great point to say that technology is not just the sole answer here.
Thank you. Yeah, I think the technology is just moving so fast. It's becoming increasingly hard for businesses to adopt it and use it, and regulators to keep up also. I think we're almost out of time, but I would just like to add, do feel free to contact David and Stuart for more information. I think this is why these sessions are so important for us to understand how banks and institutions are applying the technology today. I've just quickly sneak in one last question. If you have any advice on navigating data clouds, comparing the likes of Databricks or Snowflake?
What's the question? How would you compare the tools?
Or
Yeah,
navigate?
navigating, yeah. So navigating data clouds, comparing Databricks or Snowflake, if you're familiar with that.
I think from our point of view anyway, so at GFT we actually do that, right? So we compare tools quite often with our clients. We've run comparisons across different data tools across cloud providers. I think it always changes. So one year ago, comparing Snowflake to, for instance, Synapse or Databricks, it's not going to be the same as today, because everything changes. The features, different features all the time, depending on the cloud that you're using. I would say, and I'm going to say this because I'm from GFT, go with a consultancy like ourselves to help you define what those could look like. But bring us in and we can have a look what you actually need, as opposed to looking at generic vanilla what they are in the market. We can look at what you actually need and how it best suits the company. I can put it that way. Yeah.
10 seconds for me would be, there are a number of customers using Denodo in multi-cloud architectures to right place the right data for the right use case.
Yep.
Thank you very much for sharing your time and expertise with us this afternoon. It's been really valuable. It's a lot of information to cover in 45 minutes. Also, thank you very much to our sponsors for making these webinars possible, and of course to our audience for logging in and asking such interesting questions. I think you've really kept our speakers on their toes. Also, don't forget to check out our forthcoming events. We've got lots more diverse content coming up, moving on to migrating birds, the generations and how they shape who we are, and global warming. So thank you very much, everyone, for joining this afternoon. Take care. Goodbye.
Thanks very much.
Thanks. Bye.